Welcome to In Early, the crypto podcast, where I speak to those at the forefront of the digital asset space, telling real-life stories, discussing the growth and growing pains of the industry, and exploring how blockchain technology has made an impact on people's lives. My name is Matt Green, and I'm the blockchain litigation lead at Shoesmiths. This week's episode features Jonny Fry, the Crypto AM Influencer of the Year 2022. A wealth of knowledge in this sector, Jonny runs Digital Bytes, which creates and distributes a weekly roundup of the biggest stories in the world of digital assets, complemented by his own podcast, Digital Bytes, by his brand Team Blockchain. We speak about a huge array of topics, from his views on regulation, the history of digital assets and money, to how he came to found his media business off the back of years of running and managing funds, how he chooses topics of interest and carefully curates, and what being an influencer means to him. Jonny, how you doing? Welcome.
Thanks, Matt. Nice to be here in the middle of the city, sitting by. I'm under Bow Bells.
We are?
Wow. Yeah.
Hopefully they don't go off.
Hope so.
Otherwise we're going to have to restart. Thanks for coming down. Now, I know you've been in the industry for a while running Team Blockchain. You're a NED at Turn, or the Investing and Saving Alliance, that's the T in Turn, Universal Reporting Network, and a chairman of Gemini Capital. And when we spoke at the House of Block event, the party in December last year, you told me you hadn't always been in this space. So I think it'll be useful to understand your journey, what you used to do prior, and how you've come into this industry.
Right, okay. My sort of longer term career was I set up a fund management business. So managing, in those days, they were called unit trusts. So it was managing sort of collective pools of investments for private clients. And they were sold through intermediaries, accountants, lawyers, solicitors, IFAs. And then that was back in started back in 87. So quite a long time ago now. And I was really cool. I was a real techie because I bought a TV with teletext in it. And perhaps a lot of the listeners and viewers won't know what teletext is, but basically it meant that I could tell my clients what the price of BP was, and it was only 15 minutes delayed. Whereas they were having a copy of the Times or the Telegraph, and some of the upmarket ones had the FT, but they were 24 hours delayed. So
right, you had a massive.
So it was huge. It was huge tech, but no, we went on and bought Brewin Dolphins Unit Trust Company,
right?
Which we then turned into UCITS, and it also had a range of funds in Luxembourg called CCAPs. And I was CEO of that business, and we floated it here in London for over 20 years. And then I just wanted to do something different, have a change, and for a while actually got involved in running a business just around the corner from here. And they were selling penny shares, and that was an interesting business.
Go on. Give me like a minute on that, because it sounds like you want to say some stuff that maybe.
No, just I'd never worked in the city. I'd set the business up in Guildford. Really modelled on a company called Perpetual. Perpetual got taken over by Invesco, but Perpetual were based in Henley, not far from where my parents lived. And I thought, well, why be in the city? Mm-hmm. Why do the commute when you don't need to?
Yeah.
So I used to come up to London or come to city sort of once a week, but most of the time I was spent in Guildford. And then it's probably a bit longer now. It's about 7 or 8 years ago. Kept coming across this thing called blockchain, and I had no idea. I'm generally not a techie. And then Bitcoin, and Bitcoin at the time was all about Silk Road and sort of dodgy dealing, and screw the banks and all this sort of stuff. And thought, well, actually, I've always been regulated. That didn't really float my boat. But I was intrigued by the technology, and It had always irritated me that you have an annual management fee on a fund of, say, 1.5%, but what it actually costs the investor is probably nearer 2.5% to 3%, something called a total expense ratio.
Right.
And it was because you've got lawyers and you've got administrators and custodians and trustees and marketing. And I think, well, hang on, surely if we're the regulated fund manager, shouldn't we take responsibility for all those costs? Why have we got all these costs? And it has got better, to be fair, but to have a ledger, one record of information that everyone can share, the regulators, the clients, the suppliers, just to me seemed to make a lot of sense. And I was talking to actually a lawyer friend of mine, and he was saying, "Oh, what are you doing?" And I said, "Well, I've just been looking at this technology called blockchain." He said, "Bogchain?" I said, "No, it's blockchain." And
don't mention them by name.
Well, I could do. They're not far from Minitrack. And we'd had a couple of beers, and I was telling about an event I'd gone to with IBM were talking, and they were talking about QR codes. Do you know what QR codes are?
Well, now, I mean, they were made very famous by COVID, obviously, because you had to scan in menus and everything. But back in the day...
And what does QR stand for?
Go on.
Come on, you're a lawyer. You're a learned friend. I know you haven't got your wig on today and your robes, but...
I don't know.
For goodness
QR
sake,
code.
Matt.
I just know it as a QR code.
Quick response.
Quick response.
Yeah, quick response. What do you think about it? Quick response.
Well, it depends what sort of internet connection you have when you're doing it.
Well, that's true. That's true. So, and they were saying, look, if you can prove the provenance of a product, then people will pay up to 39% more. So if you can prove where, I don't know, where the flowers came from, the honey came from, the milk came from, whatever it may well be, people will pay more. And people are much more mindful. Is it sustainable? What impacts are having? And we had another beer, didn't even think about it. About 2 weeks later, the guy phones me out, the lawyer, says, can you help me? And I'm saying, yeah, sure. He said, well, we've got one of our biggest clients, and they've asked us, what do we do about blockchain? That's gonna be a laugh. You get confusing blockchains and bogchains.
Yeah.
He said, well, no, that's where you come in. He said, we'll pay you, but we'd want you to come in and talk to them. I said, talking about what? I know nothing.
Did you have an experience at that point?
I said, I know nothing about the petrochemical industry.
Yeah.
But you were explaining how the technology can help.
Right.
Can you come and talk to them? And I had done quite a lot of research and a lot of reading, been to a lot of events over the previous sort of 18 months. And I said, yeah, look, I'm more than happy to come in. And I gave them a sheet of paper, a bit like this, but on there were a number of blue lines. Now, I know you receive Digital Bytes, which actually is a publication we write every week talking about this topic. And the blue lines are hyperlinks. So if we say, I don't know, Apple's the biggest company in the world, it's actually not, but if we did, it's because CNBC or Le Monde or Singapore Straits Times or the FT or whoever have said that. So it gives more reading around the topic, but it's for verification. Because I'm personally regulated by the Central Bank of Ireland, being chairman of a fund administration platform out there, you just got to make sure that what you're saying is right and correct. And most of our lawyers, most of our clients are lawyers, accountants, asset managers, banks. So we did this for this lawyer, and they loved it. And the client liked it because I said, look, you're the biggest, or one of the biggest retailers in the world. I know you make petrol or refine petrol, but actually you've got so many gas stations and petrol stations. And if you could just take 20% of your products in your gas stations and increase the price by, I don't know, 10%, what would that do to your bottom line? And they were absolutely intrigued by the concept of blockchain and what it could do.
So is it the value add of blockchain in as much as it's sort of like provenance of data? Is that really where this all came in for you?
For that particular example, but if there's one little nugget I could leave with people today, and that is, first of all, blockchain is no more than an Excel spreadsheet on steroids. That's all it is. It's just information that's held, but securely. So that's where the steroid bit comes from. It's just held securely. And the biggest attribute that blockchains can give you is transparency. And if you have more transparency, you have more trust. If you have more trust, then you can build a much stronger compliance and risk controls. Doesn't matter whether you're regulated or not. Every business is looking to minimize the amount of risk that they're taking.
So it's about being able to verify that data, and that's the value add for your clients at that point.
Yeah, essentially, it's that knowledge and that verification and that transparency that it gives you.
And that's led you to where you are now. And it sort of stems around Team Blockchain. I guess it's a media company. Is that?
It's really a research and publishing business, and
Okay.
it's so what we're looking at: who, how, where, and why people are using blockchain and digital assets. Now, digital assets go from the hairy, scary, crypto, NFTs, and all that sort of stuff, right the way through to sovereign currencies. So central bank digital currencies, CBDCs, and I think it's people get very fixated on crypto, and it's a bit like Marmot. They love it or hate it. It's a rounding error. It's 1 trillion. It's really nothing that impressive at all in terms of when you look at other assets. Now, what I mean by other assets, if you look at the equity market is about 90 trillion. The debt market's 110 trillion. According to PwC, the funds market will be 150 trillion year after next. But the real estate market, according to Savills, is 326 trillion. So why would you want to focus on 1 trillion when you've got hundreds of trillions in asset classes that we all understand? And that most of the listeners, most of the viewers here already are exposed to, because they're either renting a property or they own a property. They're being forced to save money in their pension, so they've got money in funds.
And they understand it, right? It's been around for a while. When I speak to my dad and when I started all of this, he was like, why have you moved from being an intellectual property lawyer where you've got a good background in that and you get it? Why are you now doing all this blockchain stuff? It doesn't really make any sense. And I guess he said that because maybe there wasn't an understanding of what this is all about. Maybe he just thought that it was, as you say, Bitcoin is to do with Silk Road and it's all scary. But actually, it's about the tech. And I guess that's where you've seen it. You've gone, I understand the tech and where this is going and how information can be verifiable. And there's a value add to all these traditional markets.
Absolutely. And I think it is about the tech, but you don't need to understand the tech. You need to be able to use the tech.
Yeah.
And there's quite a difference there. So you don't, I think the most important thing is that there is a very big difference between, if you like, how the tech is being used. Regulators and lawyers, regulators don't regulate tech, but what they do, they regulate the outcome of how the tech is being used. So that's what we've seen increase. So we're now seeing more and more institutions who are very active in this space. And when a lot of people say, yeah, but it doesn't affect me. So in Digital Bytes, every week we will write about fashion, agriculture, insurance, banking, the media industry, football, because all of those, and if you're listening thinking, well, I don't understand, put in what you're interested in or the type of company, put blockchain plus fashion, blockchain plus agriculture, blockchain plus
stick that to Google News or go on as your side, right?
Put it into Google and just see what comes up. And I think you'll be very, very surprised at the brands, global brands that are engaged in the technology and the creation of these assets.
So tell me about sort of the setting up of Digital Bytes and what it aims to achieve.
Well, what it's not is a newsletter.
Okay.
So we don't take...
Why have you made that specifically?
Well, because there's lots of news being made.
Yeah.
There's lots of press releases, and half the time the press release is there for one reason, to promote what they're trying to do. So there's no point actually regurgitating that, I don't know, this company or that company. So what we're more interested in doing is, so one of your neighbours, I'm sure they're still here, is Aberdeen Asset Management. I think it's just across the road here.
I've been here for a few months.
Oh, well, Aberdeen,
yeah.
Aberdeen, they bought Standard Life.
Right.
They're about a 600 billion asset management company, fantastically successful. And they have recently put money into a digital exchange here in London called Archax.
Okay.
And they are launching some of their funds in a digitised format. I think, so what? Well, why does that impact me? Well, there's a number of reasons it impacts you. First of all, at the moment, if you want to go and buy, a fund from Jupiter or Schroders or M&G or anyone like that, you get one price once a day. The price is from the asset manager, and you can deal at 12 o'clock or 2 o'clock or 4 o'clock or whatever it may well be. And that's the way the industry works. Now, once you digitise the same fund, so you don't touch the underlying assets, all you're doing is doing something with a wrapper. So you're simply saying, now we're going to make this available in a digitised format. That means you can deal 24 hours a day, 7 days a week. And it means instead of the price coming from the asset manager, you got the price from 4 or 5 independent market makers. Now, from a regulator's point of view, what's better? One price once a day from someone who could be argued to have a vested interest because he's the asset manager, or 24-hour a day dealing, 7 days a week from independent market makers. It's a no-brainer. Now, on top, there's other advantages, but just that one little example in the asset management industry proves that you can actually now start doing things that you couldn't do before.
Right. And in terms of how that interacts with Digital Bytes, you said that you don't sort of offer press releases or what do you call them, publications, right?
Yeah.
How does that fit in, or how does Digital Bytes sort of market itself? What is the mission?
Well, okay, so it's quite sometimes what it isn't. It's not meant to be a newsletter, and it's not meant to be a tip sheet. So we're not trying to give investment advice. What we're trying to do is say, okay, Aberdeen have just invested some money in a digital exchange. Why is that important? What could that lead to? What does that mean for Aberdeen, for that exchange, for the wider community? And so therefore we'll wait very often for news to come out, wait 2 or 3 weeks and see what other commentators, we don't have a monopoly on good ideas, so we'll see what other people say.
Right.
Well, now it seems, did you know this could happen? Or that? So let me give another example. There's a lot of talk about stable coins.
Yeah.
So stable coins typically are a digitized form of making a payment backed by something. Now, it could be backed by gold, or it could be backed by a basket of cryptos in an algorithmic segment, or it could be in its simplest form backed by the US dollar. And the biggest stable coin out there at the moment is Tether. It's about 80 billion in size. Typically, there's about 30 to 40 billion a day being bought and sold. But the price of Tether, the day before yesterday, was as low as 99 and as high as 101. So I could make 1.5% in a day by holding what is meant to be a stable coin. Now, alternatively, rather than having a stable coin, you could actually take Franklin Templeton's cash mutual fund. Now, cash mutual funds are, you put your money into these cash funds whereby instead of cashing and holding your bank, you give it to a fund manager and they manage it like a cash account. Now, Franklin Templeton have actually got $1.4 trillion under management, and they've taken their cash mutual fund in the States and said, okay, we'll make that available now in a digital format. And they've actually now attracted over 330 million of funds. In Europe, there's 1 trillion euros in cash mutual funds. Here we have 51 billion in cash mutual funds. In the States, they've got 4 trillion because you get much better returns on your cash mutual fund than you can on the bank. So if you take the cash mutual fund, you digitize it, and then stick in a Stripe, a PayPal, a Visa or a MasterCard, you can then spend money directly from your cash mutual fund. So you're bypassing the banks. Because I don't know about you, I have a bank with Lloyds Bank, and I think they pay me 1% on my deposit. I've been banking with them for 40 plus years, and they don't treat me any better.
Yeah.
Actually, they treat me worse. So if I had a cash mutual fund, I can get a much, much better return on my money, and I can make payments globally almost for free. So this is what I mean by, so when Franklin Templeton makes some news, like they did in January, so what? That's what I mean by so what, because in the Forex market, the cost of doing foreign exchange institutions, and London's the biggest FX market globally, it's about $120 billion in costs. And I'd say 90% of that cost could be taken out as we start to see the digitalization of cash.
So when you prepare this content, a news story comes out, as you've just said, right? You give it a few days, a few weeks or whatever, and then you're able to provide a reflection on what's happened. Who provides that opinion? Is it yourself? Do you have people on there who provide content for you? How does it work?
Well, we've got a team of about 5 or 6 people, purposely based in Asia and Africa. So we'll actually say, like, this is what's happening. These are some websites. This is some ideas. Come back. And it's about 1,000 words per article, and we put together 3 or 4 articles typically, and then that every week, and that goes out to about 20,000 people in various different channels, and that's free. And then we have organisations, and you're going to be one of those very shortly, Matt. I'm going to get you eventually, and I'm just wheeling you in. But we have companies like yours. We have a lot of lawyers that basically have a license to actually then use the content.
So it's for professionals, individuals. I mean, when the
content's for individuals, but we have a number of asset managers, banks, lawyers, accountants that then have a license to use the content. But then, as license holders, if they want to, they can write a letter. So every week we have a guest, and the reason we like the guest is that we get, I don't know, a US diplomat, or we get FedEx, or we get we're all sorts of, or we get small startup companies that will give their view on why they're using the technology or how they use it. If it's an advert, we don't accept it.
Yeah.
Because if I give you a guest and it's an advert, you're going to say, well, why do I want to advertise this to my clients? Because the idea is you use the content. If someone's giving you something thought-provoking or educational, it doesn't matter what I've written or a guest, you like it. And then we take that guest and we do something like you're doing here today. We do a podcast on a radio show which goes out to about 170 countries. And that's how we commercialize it, by having organizations, which means there's no advertising, there's no promotions, there's no sort of backhanders about it, because it's mainly regulated entity we're dealing with.
So how do you get these guests in? Because you've got some really, really decent people. I mean, who are the types of people you get in, and what sort of content are they putting out?
Well, we're very fortunate because we've been doing it since 2018. So this week's guest, Professor Sarah Green, who's head of the Law Commission for England and Wales for contracts. And she's written an article about, and this is really important, I know you'll understand it, but effectively giving some legal clarity around digital assets. Now, again, you're probably thinking, why do I care about digital assets? Well, 90 jurisdictions around the world use English common law as the basis of their law, and 80% of all global trade is carried out using English common law. So if we can define the asset and people are comfortable, whether it's a physical, intangible, or as the Law Commission is saying, a third way, then it gives some legal clarity. From the legal clarity, then the regulators can then come and play.
Yeah, we've had a different approach, I think, from most of the world. And I think the UK generally has been criticised for not doing too much enough. But I wonder whether, I was going to come on to your opinions later, but let's do some of them now, right, whilst we're here. A lot of people have said we've had this sort of standoffish approach whereby we're sort of watching the world, seeing what happens, and then make a determination as to what we want to do. Do you think that's right? Or fair?
Well, okay, I think let's look at broad regulation, and let's look at because there's a very marked difference between the US and the UK. Europe's a little bit more like the UK. In the US, if you're driving a car and there's a stop sign and you don't stop in the middle of the night, you will get a ticket, period. Because it's a law, you've broken a law, therefore we're going to fine you. And that sort of very rules-driven approach in financial services has basically, that's very much what happens on Wall Street. Yeah. Whereas, here in the UK, it tends to be, that's the law, that's the principles, that's the spirit. Because if you think what the city evolved, it didn't evolve out of laws and regulation. It evolved out of my word is my bond, out of a handshake in coffee shops. And, I will pay you when you deliver me a shed load of nutmeg. And that was it. Shake your hand. But if I welched on the deal, then the old boy network, if you like, everyone knew everyone. So don't trust Jonny because he doesn't deliver. So the idea of, okay, you've now broken the rule or regulation, the regulator will still come down hard on you, but they will, to an extent, there's a degree of latitude. There's a degree of, okay, I can understand the mitigating circumstances almost behind it.
Reading things purposely. I mean, when you did this at law school, it was sort of a European idea to sort of have some ideas, and then you sort of read it as to what the purpose of that legislation or the purpose of that regulation was for. And to some extent, if the black letter law ends up pushing you in a certain direction, you're supposed to read what it was supposed to be built for rather than where it pushed you into. So maybe we're a little bit like that. Maybe the
very much so. But because of that, it's very difficult to have hard and fast rules when you can't define the asset. So you'll be familiar with this. Husband and wife go in, get divorced. Wife's got $1 million of Bitcoin. Husband says, I want $500,000. The judge going, what's that? What's Bitcoin? So I had to pop back to the law commission and basically said, well, I don't know Bitcoin. Then they got a whole lot of experts like you and other law firms, and they said, well, this is what Bitcoin is. It's a load of dots and zeros, but actually you can cash it in and get some money. Well, that sounds to me like an asset. Right, okay, madam, you give half your Bitcoin to him. That's a very crude, basic example, but that's basically what's. And so now we have a situation where the law commission said, we believe that actually digital assets have the same rights, obligations, and actually there are certain digital assets which they're not physical, i.e., lumps of gold or a house. They're not intangible. Like goodwill, I suppose, is probably the best example. There's this third way, and that's what they're recommending. There's obviously change in Parliament, but I think much more importantly, they have now given the green light to a judge. So if someone brings a case with a digital asset, and the judge says, "What's a digital asset?" Well, they've already spoken to all the judges before they come out with the report, and the judge will be able to say, "Well, the law commissioner said this. I will now make a verdict." We now have case law. And 9 times out of 10, the judge will follow what the law commissioner said. So we're going to get case law coming through, I think, fairly quickly, which will define what the law commission or encourage or underline, if you like, confirm what the law commission is saying. And now we've got law. Now that's English common law, case study, which, you're a lawyer, I don't need to tell you all this. The rest, 80% of the world trade is based on.
Well, the law commission said that they're going to base what definitions of digital assets are, number one, on something that isn't defined but what it isn't, which is sort of a negative. It was interesting. But secondly, they said we're going to have it driven by common law on the basis that it already has been, and it's pushing the judges in the correct trajectory. And I think that's right. So I suppose, look, I'm going to talk to the Matt Kimber and Professor Sarah Green at some point to do a podcast to try and get the answers.
You should get Sarah, and she's fantastic. She really is great.
We're going to talk about what's happened since, right? And I think the topic's essentially going to be common law's been doing really, really well, but we're going to have to adapt. And I think that they've sort of allowed this definition to be nice and open to ensure that it's not pigeonholed in a certain way. But my sense is that there are enough definitions that, digital assets are property and that it can be treated as property at common law already, which is great, but we just need to see where that goes. So I suppose coming back to the original question, which was, do you think that we're sort of standoffish and we've done the right thing? Maybe the answer is we have, but we haven't done it via strict regulation. We've done it in a much softer approach. We've gone to the Law Commission. We said
it's a more considered approach. I think we've looked at it in the round. Do we need to regulate microphones or bits of paper or cameras or?
Do you think it's just less crude the way we've done it? We've gone to, so for instance, another jurisdiction may not have an equivalent of the Law Commission, and they may not be able to make these reports. It may just be that certain jurisdictions go, okay, well, we need some regulation, okay, and then just put a line in the sand. Whilst we have in this jurisdiction the capability to produce these reports and consider things carefully.
I think the reason English law is so widely adopted and followed is because it's very considered, very measured. It's not knee-jerk. And we have centuries of case law and examples of how that has got to where we've got to. A lot of people get frustrated about regulation, for example. The reason we have so many regulations in this country is because scallywags keep doing naughty things, and we have to, we now have got to stop that action. We've got to stop that action. And so therefore the rule book gets bigger and bigger and bigger. So, we can't turn our back on that. These are there to protect investors and protect the confidence in the financial markets and the systems. But the other thing I don't want to focus on, this isn't just about financial services. The definition of assets is going to help enormously, because also running through Parliament, we have the bill of digital bills, which are basically documentation for global trade. And according to McKinsey, that could add an extra 60 billion of value to world trade. And there's 25 billion bits of paperwork which are produced to be all around the world to ship containers all around the place. To take a container from Asia to Americas or to Europe, there's probably about 27 different entities get involved. Now, if you digitize the documentation, the biggest ship in the world is currently being just launched last couple of weeks. 24,000 containers, 20-foot containers got. Now, if you're the skipper on that boat and say, where's container number 244? It's somewhere. It's got a whole load of Kawasaki's in it. Where's it gone? Come on, you can't do that, because these boats only make money when they're moving through the water to deliver and collect goods. So they need super, super fast turnaround. And that's one thing that COVID taught us. We do some work with a company called Two Tokens in Amsterdam, and they've been working with the Port of Rotterdam because they had boats coming from Rotterdam or Singapore, and they couldn't fly the documents, which is what they used to do, and the boats were there sitting there because of COVID. And they said, this is mad. But then it's no more mad than 60% of asset managers still use faxes to confirm deals.
Now,
you've never used a fax, have you, Matt?
I remember back in the day, I used to see my dad in his office in Africa House. When I was a kid, and I just remember playing with I used to peel the sides of the fax machine paper off. That was really good fun.
Well, so if you're going to have artificial intelligence, like JP Morgan are building a bot to manage money, and you've got a lot of it as a lawyer, because you lawyers have got, look at your beautiful offices here. So JP Morgan managing your money, well, if you've got, say, 5 funds, and one of them is digitized, or let's say 3 are digitized, but the other 2 are relying on PDFs and bits of paper and filing cabinets, it can't do the work on those 2 funds. It can only analyse these funds in terms of looking at risk analysis and appropriateness and then buying or selling them. And so what's happening is AI is driving more and more information and data to be digitized. And that brings up the whole thing of loyalty points, of your healthcare data, of your car driving habits, of your spending habits. And all of those have been monetized by the FANGs, Facebook, Apple, Netflix, Google, etc. But going forward, you're going to be able to digitize your information and therefore monetize your information.
Do you think that's why, and just sort of going back to the Law Commission point that we were talking about, that's why they've left it so open to ensure
precisely
all of these things can be captured by this third category and can be considered a common law?
Absolutely, because we don't know the questions, let alone the answers right now of what will happen. But if you look at, in Dubai, it's a classic example. If you go and have an operation in Dubai, it's all loaded onto a blockchain, and you can see the performance success of your operation, of the hospital, of the surgeon, the anaesthetist, the nurses. You can go and check up all of their, their CPD, how updated with their training, letters of complaint, all that sort of, all that is transparent on a blockchain. So this is an example of how this information is helping you to actually look after your own information, nothing to do with finances. And so we're seeing more and more examples. Or if you now jump into the metaverse, so you've got fashion companies that are selling handbags, digital handbags, for more than the actual real handbags.
Who is buying them, though? I don't know the answer to that, because we're going massively off topic here, but I just, whilst I've got you here, people talk about the metaverse a lot. and digital assets within and buying NFTs. In fact, who's doing this? Because there seems to be a lot of investment into it, but I don't know necessarily many people who spend a lot of time in there. I mean, maybe I'm wrong. Maybe you'll tell me that you're always in there.
No, well, okay, look, I wouldn't bet against people like Microsoft, Meta, formerly Facebook, people like Citibank, who reckon the metaverse is going to be worth 13 trillion. So 13 trillion, just to put some context, is more than twice the size of the third biggest economy in the world, i.e. Japan. So metaverse, most people think, is about gaming.
Well, that's how I think, from my perspective, that's how we're going to get into it.
Well, no, I think you're going to get into it. I think the law firms will be using it, within a couple of years for training. You've been doing a lot of training for your trainees today, and they've had to be shipped all over the place. Well, Accenture, now the last 150,000 people, have actually done all the training in the metaverse. Because, okay, so Jonny, you're now in the Paris office. What we can do, we can take you down to Bordeaux, on with the glasses, and you're going to see, here are our clients in some vineyards. Now we're going to take you into the Pacific mobile. This is an oil rig, and this is what they're doing. So it's a much more immersive technology. So therefore, it's going to become something much, much more valuable. And then when you're in that environment, if you then want to start trading information or goods or whatever you want to do, you can do that. So education and healthcare in particular, I think, will be massive in the metaverse.
Wouldn't that not be a bit sad, though? Because I see it as gaming, right? That's how I envisage it. Would it not be as sad if it's just an upgrade to Teams during COVID, where you're sitting there and it's just another way to communicate with your co-workers? All of a sudden, then you're in the Dubai office or the whatever office, when we could have been spending our time gaming in there. It just seems like it's sort of...
Yeah, but you shouldn't be gaming when you're in the office.
No, I'm not.
Come on, yeah, this is a bit of a confession. This is flipping heck.
What I'm saying is that the metaverse to me is sort of designed to be a fun place for interactions like gaming. You're saying that the segue may actually be that it's sort of a way for people in the corporate world to interact with each other. Maybe that's how...
Very, very much
into this.
Yeah, it was. I think the metaverse was obvious as a gaming thing because of virtual worlds.
Yeah.
And to be fair, I'm a little bit older than you. My kids used to spend hours and hours and hours on something called Sims, building roller coasters and shopping malls and things like that. And it's well, probably even the floppy disks being now thrown away. But if you were new into this, you'd happily pay €50, dollars, yen for my daughter's probably hundreds of hours of gaming, because you could leapfrog all that hard work, and you've got your own mall and your own roller coaster already built because she's actually spent hours doing it. So a lot of your time and effort in a gaming can now be rewarded, because you can pay for that. You can pay for extra strong shield or sword.
Well, I get that. I mean, people buy skins. The term is skins, right? You buy skins and all of a sudden the character is flaming or a certain color. I get that.
And that's why it's so easy to do it in gaming.
Yeah.
Because it was there already. People were playing online and they could see it. But again, go back to the health and medical. And, you got a very eminent sort of eye surgeon sitting in New York. He can effectively go in with a pair of virtual glasses, and he can help train, and he can actually guide another surgeon in Africa or Asia or Europe, and actually talk in that virtual, a combination of the augmented and the real and the virtual world. And once you're there, then it's just a small... So another good example with COVID, 10% of the UK population has a needle phobia. So you go in and say, I'm sorry, I just can't have a needle inside me. No problem at all. What are you into? I love skiing. Great. Tell you what, pop these on. We're going to take you into the metaverse and we're going to go skiing. And then halfway through the skiing exercise, unfortunately, someone falls over. And I said, well, don't worry, we can sort it all out. Give you a quick injection. You're up and on your way. 90% of people, once they've seen the actual video or that immersive experience, were more than happy to then have the injection. Another example in Wales, they were super worried about the stress levels of the NHS staff, because they were just really sick and poorly and blood pressure. It was, really wasn't very good at all. So they said, okay, so what we're going to do, what are you into? Well, I really like horse riding, or I really like whatever you like. Okay, so we're going to force you in a work environment to go into a quiet room and get into a metaverse, into a virtual world of the thing that you're into. And then they tracked the blood pressure, and they tracked their temperature and their heart rates and other measures of stress, and saw a demonstrable reduction in stress levels, which the main thing was less sickness.
So my fundamental question, who is in the metaverse right now, or who's dealing with it? The answer is potentially not as many people as we thought at this stage. However, it's going to grow exponentially due to different industries.
Absolutely. I think we're going to see more and more use cases. And at the moment, there's a bit of a snobbishness. Oh, no, I don't do gaming, and I'm not doing that. But let me give another unusual fact then. Something like 27% of Japanese males between 18 and 28 have a virtual girlfriend.
Okay.
You're struggling in that one, aren't you? Very woke world that we live in.
I am interested to learn more.
Well, perhaps you need to... There was a song, Turning Japanese, I think so. But the thing is, okay, no, but the reason I put you on the spot there is you're sitting there thinking, what? How come? But
it seems like it could happen. It's just that it's a strange fact for you to have just known, right? Like, is this something that is like well known, well broadcast?
That's the key to what we're trying to do in Digital Bytes. We're trying to find strange facts that you'll remember and say, okay, so different cultures, different industries have different experiences. What can I learn from that? It's not a judgment. It's not to say that that should be the case for every other country, but it's trying to say, I don't know, another good example, we all know what quarantine is. We know where it came from. Well, quarantine was an Italian word, quarantino, for 40 days. And basically, they worked out when the Black Plague came down out of France, people in those days did have like a medical certificate. And if you didn't have the right medical certificate, you weren't allowed into Italy. And in certain Italian cities, they had no quarantino, and the death rate was something like 65% at an extreme. In other cities, they would say, okay, well, you've got a certificate coming in. You're now going to go for 40 days, 40 nights into this accommodation. You had a big queue, and there was a man with it, and you Google it. It's quite interesting. A big long beak and a big steak. He had herbs.
I can picture it. I remember all the long.
But he had herbs and lavenders to try and, in theory, like a mask.
Yeah.
And they came around for 40 days, 40 nights. They sent you wine and they sent you food, and you were quarantined. And I think, well, okay. But that had a very big impact, and we were quarantining people during COVID. One of the oldest forms of money are called rye stones, R-A-I.
There's those huge ones with the squares in the middle.
No, not squares.
And they're the little squares in the middle. They were circular on the outside. They had
circles, so they could put a lump of wood in, so they could then carry them around. These things were limestone, and they were quarried 300 miles away in the Pacific, and then they sailed them to an island, and they were then a form of credit. And what they did, the measurement was your little finger and your thumb. And I owned that much, and that much was a large pig in a big canoe. And these rye stones, now the rye stone was sitting outside your house, but people had come along and carved it all up and given you that much for each one of your bits and bobs that you had, and you traded it for food. And it didn't move. Everyone knew that it wasn't your rye stone anymore.
It's a ledger, right?
It was just a ledger. But the size of these rye stones were based on how hard it was to create them. So it was proof of work. So it's really hard to make a big one, really easy to make another one. So the concept of Bitcoin, proof of work, kind of has its origins back in the Pacific Islanders. So nothing's new. I suppose that's really what I'm trying to get. And by using history, it's a very good lesson for where we are now and what may be coming forward. So we try and look for little examples like that to make it a bit more memorable.
But to tap into people's intrigue rather than necessarily regurgitating stories that you...
A press release which someone, there's a PR spin, someone's trying to get something. So we're trying, that's what we try. And we don't always get it right, but that's what we're aiming to do.
I think you are probably one of the most knowledgeable people that I've had on this, and probably therefore one of my favourites. Who might one of your favourite guests be on your podcast?
Oh, me.
Yourself. I don't doubt that's true. I don't doubt.
I must admit, I really enjoyed talking to Professor Geek yesterday, because Sarah was a geek. She was a programmer.
Did you tell her that? Did you call her that when she?
Yeah, Professor Geek with a spanner in the drawing room, I think it was. She's a very eminent lawyer, obviously. And
because you guys talk about so much. I mean, I sort of had a look at the website, the podcast. There were so many different topics. There was one. Said it was a quote. I think I've got it written down here. The co-founder of Tokeny that delves into the standard ERC 3643's history and development. There was another one about introducing the Commissioner for Digital Money, safeguarding privacy rights in the age of programmable money. I mean,
some of it's technical, Matt.
A huge amount. There's a huge array of stuff that you're putting out, whether it's super technical, whether it's to someone who is less technical. I mean, how do you sort of manage all that? Because there's a lot of different audiences there, a lot of different content there.
Well, we're trying to look for different things all the time. We're trying to. We also like to have people. So we had FedEx on last year, and the head of blockchain development of FedEx, Dale Christie. He's been working with the US government and with DHL and the like, and he basically wrote an article that the 9 myths of blockchain, and basically we can't get it to work. We've spent millions on it.
You'd have thought they would have done, so that's quite interesting, and that's the point you're making.
And that's
something different.
And what we're trying, we're not evangelical about this. I remember back in 2016, 17, people literally would stand up. It was like being in a gospel church, and they go, "Hallelujah to blockchain or smart contracts."
I quite like that though. There is a charm. I like.
No, I don't. Come on, it's naff. It's not a new paradigm. Look,
don't spend a lot of time on Twitter then.
It drives me mad. but the thing is that look, blockchain isn't. It's got its roots in Napster, file sharing back in the 70s. So this isn't a new technology. And again, I suppose having been regulated, I would rather stand back and not get sucked into the hype and look at how does it impact you, your business, and how do we position ourselves? Not from which should I invest in, but what is it going to do to us? Why should I care? And that's and bear in mind, most of the idea is that the people who have a license to use it, they then take it. So we had a really good example, very, very firm of lawyers, something called ISDA agreements. So these are governing derivatives, which arguably is the biggest asset class. And we were talking about how smart contracts are actually going to be very useful for ISDA agreements. So and a smart contract, all it is a flowchart. If this happens, that happens. Mm-hmm. That's all it is. So if it's going to rain, I need an umbrella. If it doesn't rain, I don't need an umbrella. So that's what a smart contract really does. And the Law Commission now come and say, yes, they are legally enforceable now. So that's already good. So we wrote about smart contracts. This firm of lawyers put it on their e-learning web page. The FT got hold of it and said, phoned up the lawyers. Oh, this is really interesting. We're writing an article about smart contracts. We're looking for a couple of examples of companies that are doing it. Now, we'd written, I don't know, let's say 1,000 words, and the last 300 words were examples of 3 companies that were writing smart contract business agreements. Well, they weren't clients of the lawyer, so the lawyer took them out. So the lawyer said, "Oh, can we have those 3 companies back?" So he said, "Sure, here they are." And the FT did a big puff piece about this law firm is well ahead of its competitors, talking about smart contracts. So we don't want the acknowledgement, praise, and it's not an ego trip for us. It's simply to say, look, if we can share information and show you some ideas and make it a bit more interesting and memorable, then you can give it to your clients, and then it helps you. So I'm not interested in you as Matt, you and your law firm. I'm interested in you sharing with your clients so you have a stronger relationship. So when it comes back to renewal time, you say, of course I'm going to renew because I had a real value. And it had real value. Yeah. So that's and that's just a function of being in business for 40 years and looking who adds value to my business.
So I think some of the people who are going to end up sort of reading this are going to find probably value in some use cases for blockchain generally. Are there any standout uses for blockchain either that you see now or in the future that are really going to take off?
Well, I think central bank digital currencies are almost definitely going to be much bigger than people believe and happen a lot faster.
How do you feel about them?
It's just another form of payment. I don't. A lot of people are very worried about the privacy, saying, well, that means someone can see what I'm spending on who and how and what.
And it's programmable, right? I mean, I ask people this when in recent times I've sat down with a variety of guests and asked them similar questions about CBDCs and how they feel about them. And there have been some guests who sort of thrown their arms up in the air and said, I'm really worried about them. Programmable money and sort of social credit. And there is a sense of unnecessary control. You don't share those.
I don't. Look, if just try going into your bank tomorrow and withdraw more than £5,000.
I think you can withdraw more than, yeah.
Do you know it's illegal if you're a Spanish or a French citizen to spend more than €1,000 in cash?
Do you know who I learned that off the other
illegal.
Day? Who? Yeah, you told me that. Told me that.
Did I?
Thing. Yeah, you said it on stage. It's a good one.
It's just incredible. Yeah. So, and look at the Canadian truck drivers.
Yeah.
They haven't got programmable money. Well, they have.
Do you think then that you're not saying that CBDCs are bad, but to some extent what you may be saying is we've already got programmable money, or at least we've already got limitations on the freedom of our money, so CBDCs aren't that bad. Is that what you're saying?
Well, okay, so I suppose you need to back up. I do not believe we're going to see CBDCs in any significant use for retail investors.
Okay.
Why? Simply because utterly annihilate banking systems because we work on fractional banking. And for more on fractional banking, that's another episode for one of your banking clients. But take it from me, we cannot, because why would I put my money with Lloyd's when I can go straight to the old lady at Threadneedle Street where there's no credit risk and all the rest of it? So we're not going to see it at a retail level on a mass basis, but at a wholesale level, we're already seeing. There's something called the repo market, which I know you'll be familiar with. And there's a company that's trading 2 trillion a month already using blockchain technology. So the scale, the speed is not a problem. We, two of the companies are probably one of the 2 best-known companies in the world in the financial service sector, Visa and MasterCard. The average profit margin on the S&P 500 is 10.2%. Visa and MasterCard is somewhere between 52 and 62%. So they have a monopoly over movements of monies. And we've got companies, and we're very lucky in the UK because we've got a whole load of fintech businesses. The Tides, the Monzos, the Revoluts, the Stripes and all that stuff.
So do you want to break the monopoly of Visa and MasterCard? Is that part of it? Is that the feeling?
It's not that I want to break it. It's not what I want. I think it's a good idea to have choice.
Okay.
And therefore, I don't use checks anymore. In America, I don't think they have standing orders or direct debits. Everything's written by check.
It's weird sometimes you guys still have to sign for stuff. We've had
Whereas
in for how long?
Yeah. That whole sort of near payment came out of American football stadiums because people didn't want to queue up, so they got nearby and go to the the vending machine and they could put their phone and pay, or the credit card and pay for it. But so the cost of transactions, you'll find it. America, I just quote America as a so-called sophisticated country. You're seeing signs in restaurants saying we'll give you a 5-10% discount for cash. It's not because they're doing money laundering. It's because the interconnector fees and the credit card fees are roughly 5 to 10%.
So do you think the CBDCs will do away with that, or at least give people the option to do away with it?
No, I don't think CBDCs will, because you won't be using it at a retail level. But what CBDCs will allow the banks to actually make transfers much, much quicker, much, much safer, peer-to-peer. So at the moment, most of the bank interbank money is moved around using something called CLS. And the messaging, Barclays owns Paribas, and Paribas owns HSBC. That's all run through a company called Swift. And Swift have already come out and said, we can handle any digital asset, any central bank digital currency or any other digital asset on our system. So Swift could effectively take out CLS. Well, meanwhile, we've got funny little company called HSBC, and they've developed something called FX Everywhere. And that is faster and cheaper than CLS. And now Wells Fargo are using it. So at a wholesale level, but at a retail level, I come back to, I think we're going to see lots and lots of stable coins. I just hope we don't go back to the 1860s in America, where there were 5,000 different issuers of US dollars. It was chaos.
I thought that's what MiCA was for. I suppose it's not in this jurisdiction anymore, but it's just to sort of regulate the idea of stable coins to make sure that we don't go back to those days, right?
Yeah. But it all got kicked off courtesy of Mr. Zuckerberg. Facebook, Meta.
What did he want to do? What was it called?
Libra,
that was
Libra. Great idea. Because it wasn't based on the US dollar. It was based on a basket of currencies. So I suppose the final little history lesson I'd perhaps like to leave with you, Max, we've been yakking on for far too long, but what's the world reserve currency at the moment?
I used to say that it was the London housing market, but it's not so much anymore.
But what is it?
It's supposed to be the dollar.
Okay, and what was before the dollar?
Before the dollar, it's probably gold.
Nope. Pound sterling.
Okay.
And what was before pound sterling? Come on, you know your history.
Well, let's do it.
French franc.
Okay.
And what was before the French franc?
Go on.
Spanish peseta. And what was before the Spanish peseta? The Portuguese real. Now, I've just saying back to 1456. Those currencies last on average for about 94 years. So the US dollar has been existing for about 106 years. So the US dollar's time has come.
So it's actually sort of gone beyond what?
Past its sell-by date. So what's the next one going to be?
Right.
I don't think it'll be the Chinese currency.
It won't be yen. Well, there was something recently. It was like it was either Kenyan diplomats or it was some group in Africa just saying like we're done with the dollar. We don't need this anymore.
Well, the BRICS, Brazil, India, Russia, China, South Africa, they're all saying no. We will want to start trading in our own currency in some shape or form. So what we're going to see, the US dollar, is already declining in terms of its use. Foreign central banks are not holding as many US dollars. So what's going to replace it?
See, some people might say Bitcoin's going to replace it. You're not feeling the same way.
I don't think so. All I would suggest is that whatever replace it will be digital. Mm-hmm. The logical thing for me is you have a basket of equities, debt instruments, real estate and commodities, and that's what it's backed by. So it can't be manipulated.
Why couldn't it be manipulated?
Well, because the value is what the value is. If you've got a basket, a global basket, so I don't know, the US equity market is 5% of that basket, and London is 1%, and gold is 0.5%, and you build up your basket. But whatever it is, I honestly believe it'll be digital.
But would that not then be, or maybe you're envisaging a global currency?
We're going to have to have a global currency to replace the dollar. Yes, I believe that's going to happen. Or we just go back to our very fragmented, and people will not want to deal with the US currency, because if you look at the it's just come to its. So this is why some of the bigger picture stuff is really important, because this is going to impact your life at big style.
I just don't know when we're going to get the answers to this. I think maybe this jurisdiction at least we're getting there, and it's nice and slow. We're sort of plodding along a little bit, but we're making, as we said at the start of this conversation, careful consideration as to how we play it. I wonder what the catalyst is going to be, because if everyone in the world is going to be involved, and there's going to be a catalyst that sort of shocks everyone to come together to figure this out.
Well, it's already happening. Arguably the catalyst was the invasion of Ukraine.
Okay.
Because the Chinese turned and said, oh my goodness, you can turn SWIFT off? That's not good. So they've come out with their digital currency. And who knows, they're going to turn around, and all the different Belt and Road initiatives they've got in all the different countries for the ports and airports and stations and road tolls and all that, you can only pay using the digital one. That would be an obvious one. So now they've got involved with something called Project Enbridge, whereby it's a selection of Asian countries, because China's quite interesting, because they are now putting more effort behind Project Enbridge. Mm-hmm. And the reason for that is they did have the digital yuan, but it's illegal for your company to pay my company. You're not allowed to. It has to go through a third party. And they've created this digital yuan, and they're now saying, we need to redefine what money is. It's this, because you're not allowed to do that. But the whole idea of this digital thing is that we can do it.
Well, there's supposed to be freedom in the movement of these. Okay, yeah,
but so even a country, Japan, they're saying, oh, hang on, this isn't what we intended. So let's look at a different project. How to do it. So no, and the reason I say that is, people say, oh, you're an expert, Jonny. I am not an expert. I just happen to spend 20 hours, and have done so for the last 6 years, looking at this and trying to figure it out and say, well, what impact will that have? How does that work? Where's it likely to lead to? And that's kind of what we do. And alongside that, you get involved in different projects, and it's fascinating. And one of the projects is digitising the land registry, and
that needs to be done. That and passports really needs to be done. Absolutely. I don't know why that's not being expedited. It seems really obvious. We've had loads of topics covered. To be fair, this is the most I've ever gone off on a tangent. So thanks for that, Jonny. I appreciate that. Let's see if we can sort of pull it back a little bit. There were some questions I had, and I've got one here. It says, the Royal Assent of the Financial Service Markets Act, right, which was recent. It says it seeks to regulate those dealing with crypto assets. My understanding is that trading in cryptocurrency will be regulated activity, right? And I've got well, first of all, I said, can you tell us what a regulated activity is? And then I've put down on my notes, it says the Economic Secretary to the Treasury, Andrew Griffiths, said, and I quote, 2023 is proving to be a banner year for reforming our financial services. This landmark piece of legislation gives us control of a financial services rulebook, so it supports UK businesses and consumers and drives growth. So, number one was about regulated activities. And number two, do you agree with that quote? Do you think that's fair, or do you think that's just politicking?
Different assets for a variety of reasons are deemed to be regulated. Mm-hmm. Okay. It is rather odd that cash is not regulated. So I can manage your bank account, and I can switch your cash between different currencies, and I don't need to be regulated. Most people don't realise that.
Well, if I gave you a bag of money, not regulated, obviously.
It's not regulated. But if you gave me access to your bank account and said, Jonny, all you can do, you can move between, I don't know, you're with Barclays, and Barclays can offer to go from sterling into the dollars, into the yen, into the euro, Swiss franc. I'll give you authority to manage my money. Don't need to be regulated. If I want to manage property, don't need to be regulated. Mm-hmm. So there are certain assets, for whatever reason, have been deemed that you don't need to be regulated. As soon as you pull them and create this thing called a collective investment scheme, that then needs to be regulated, and you need to be regulated to be able to do that. So there's no hard and fast rule just because you are dealing with an asset. Pictures, again, don't need to be regulated per se, but you do need to make sure you carry out KYC and AML. The same with wine, the same with cars. So you don't think you're regulated, but you maybe are regulated. That makes sense. So that's the joys of regulation.
Do you think that dealing with crypto assets does need to be regulated? And I bearing in mind, I think it was the UK Parliament put out a paper recently that it was all gambling, or at least they thought it was, we're getting a very different idea of how we're supposed to be treating crypto assets. One minute it's going to be regulated, then it's like gambling, and then it is property, but it might not be. I mean, are we not in a position where we're really confused or at least getting mixed messages?
Well, the trouble is that the regulators and the parliamentarians are frightfully confused. Look, the only reason we're talking about cryptocurrencies now, well, it's two reasons. Fear of missing out, or greed. Because you've got things like Ripple, XRP, went up 38,000% in 1 year. Wish I'd put £1,000 into that. You and I wouldn't be sitting here today. That's the reality. Ditto Bitcoin, ditto Ethereum. So people are saying, oh my goodness, I could do this. I'm looking for the next meme coin that's going to, we had Pepe coin the other day.
Shot up to whatever.
Yeah. There was one example, some guy put $250 into it and cashed out millions and still got millions into it. And people are driven by, I've never bought a lottery ticket. I think it's a tax on the poor.
I won the Euro Millions today. I got an email. I woke up this morning and won £5. That's what you listen out.
There you go. £5. There you go. How much did you spend to get your £5?
Let's move on.
But the odds are 14 million to 1. So why would you encourage the population, the poorest people in our society, to go and gamble? And that's what they've done. So I think the obsession around cryptocurrencies needs to be seen. What I said earlier on, it's $1 trillion market. In the asset management industry, people don't buy smaller companies. Institutions don't. They buy funds that invest in smaller companies, because smaller companies are illiquid, under-researched, and a specialist area. But it's been proven by the London School of Economics time and time again, you ought to have 3 to 5% of your money in smaller companies, because it improves your Sharpe ratio, i.e. you get, if that's a risk and return, it basically what it does is say, okay, well, I can actually go that way. I can get better returns for less risk. And then it goes back like that by having, so the same with cryptocurrencies.
Do you think then that...
No, but hang on. So therefore you need to get your exposure through funds. And we're seeing hundreds and hundreds of funds being launched. It's much safer to say, okay, I'm going to put 3-5% of my money in a fund. In theory, someone professionally looking after managing it. Because it's a collective investment scheme, it's going to have to be regulated. Now I can focus on where my other 95% of my money is. And that's an interesting figure. If you look at high net worth investors, they have about 5% of the money in alternative investments. If you look at ultra high net worth investors, this is according to Boston Consulting Group, Goldman's and Knight Frank. They've done these studies saying they have 43% in alternative investments. So they're holding hedge funds, private equity funds, VC funds, art, cars, wine, second properties. Now, mere mortals like us, we can't get access to that. But once you digitize those, then you've got millions of people are able to come into this market and get exposure to markets and investments which have proved to be really, really good.
You're talking about tokenizing assets to almost fractional levels where people can buy equity via tokens in these real world goods. Is that what you're talking
Absolutely. About? Like KKR that manages nearly 600 billion of private equity funds. They've digitized their 4.5 billion private equity strategic health fund number 2.
Do you think that those sort of tokens need to be regulated?
They are regulated.
Right.
They are regulated.
Well, some of them will fall under the specified investments already, but if we're talking about tokens that may have rights tantamount to specified investments, well, we don't necessarily know where that line is at this stage.
Well, and that's back to your point why I think we need to have a flexibility in the law to do that. Where at the moment there's a real grey area is the tokenization, as I mentioned earlier, of your healthcare information or of your driving habits. And, we work with one company called Minima, and they're working with a huge Chinese company that owns Volvo, we'll also get their name, and they've got a whole load of IoT devices. So when your car's coming to me, it says, oh, Johnny's car, there's a tree on the road, or there's a cyclist, or there's a pothole, or in, the traffic light's not working. I'm not told as a driver, this is already for driverless cars. So they're talking to each other. Now that's information which actually they could sell that information to Jaguar, who are devising cars, or to Honda or whatever, and that's worth something. That data is worth something. Now, if it's your data, you want to monetize that. And you will be able to monetize it. And this is the exciting thing. It's going to open up a whole area, and the desperate scramble for data because of AI will mean that you'll be able to have data which you can monetize. You'll be able to get your dividends, your coupons, your rent. Instead of having to wait every 6 months, you'll get it monthly.
Well, the idea, I think, of having this information in to use the term Web3 is that you are able to own it without a third party in the way, right? So you're saying that if you're able to own your creative output, your data, whatever it may be, then you, as you say, you're able to sell it or license it to maybe some big companies who are able to exploit it.
Yeah, but what you're selling, that token, that digitized thing, it's difficult. NFT, all it is a digital certificate. If you buy a brand new Lamborghini, well, when the last,
thank you, I appreciate that.
When you bought it last,
go
with your collection, you will be given a car with some keys, possibly, and an NFT. And on the NFT, it will have a record of the gearbox number, chassis number, engine number. If you haven't got that NFT, the Lamborghini is not worth as much. That's your proof of authenticity.
So when you bought your last Lamborghini, did it come with an NFT?
No, because I bought a Matchbox one.
Thanks for that. I want to move on a little bit, purely because we spoke about it a little bit earlier. You won the Crypto AM Influencer of the Year 2022. Did you expect to win, and how did it make you feel?
I didn't even know I was nominated until I had two people phone me up, and I thought they were winding me up.
It's a great thing. Why not? I mean, you run your own, I would say, media company. You put some original content out there.
I was very, very touched. Genuinely, we make light of some of the stuff we're doing and try and have a laugh because life's too short not to. But yeah, it's to put this thing together every week is 20 hours of my life. And the only reason I can remember all these silly things is when you were revising to be a lawyer, you didn't just read the book, you wrote it down. And if you're writing it, you remember it, so you can remember
it. Got in there somehow, all of that stuff.
So that's it. So I was very touched that, other people in the industry put their hand up and said, well, we think that, the guy knows kind of what he's talking about and, got recognition. Of course, I was very pleased. And I'm very proud for the rest of my team that I work with, because it's not just me. It's, I'm horribly dyslexic. So, my partner, she actually proofreads the whole thing and makes sure the typo and the grammar and all the rest of it, because it's not designed for techies. It's not designed for experts like you. It's designed for your dad. That's what it's designed for. So I very often get my mum to read it. It's 80, 88, 89. And she says, oh, I can understand what you're talking about there.
That's a great test. That's a great
The mum test.
Mum test.
Good old mum. Wave for mum.
Let's turn to, and no pun intended, but let's turn to Turn, where I understand you're a Ned, right? And a good place to start is the TISA. Did we say that, or did we say TISA? TISA, right? Which describes itself as a non-for-profit membership organisation and a trusted partner of key industry stakeholders in helping shape the future of the UK financial services and the environment in which we operate. That's a quote, by the way, from the website. Can you tell us a little bit more about that organisation, what they do, just sort of outside of their website built?
Yeah, well, the main source of income is selling Kalashnikov rifles and sex toys. That's what they do. So, but apart from that, you better edit that bit, I suppose. I don't know. They probably think it's quite funny as well. Not that it was. I find it interesting what they did. So this was a trade body, effectively, that was set up to crush the time it took to transfer ISAs, hence the name. And basically, it was taking months to transfer from Schroders to Jupiter, or from M&G to whoever. So they actually said, no, if we can agree some standards, some protocols, the information each want, and they've actually condensed the time. So the FCA were really pleased because it's treating customers fairly, and that was really successful. The trouble is they set it up as a non-profit. And guess what? Didn't make any profit. They said, oh, hang on, that's a bit annoying. So they went back to the 157 asset managers and said, right, what's the thing that's bugging you? How can we help if we collectively get together? So basically what they're doing, they're creating a blockchain-powered platform whereby the asset managers will put their information there, something called key information documents, KIDs. So put the documentation onto an independent site, and then the wealth managers, IFAs, can then draw the information down. So they'll know when was the when was it put up, who's drawn it down, who's looked at it. So again, it comes back to this whole thing around transparency.
But that obviously depends on whether the information that's being uploaded is right. I mean, who's there to check that?
Well, the asset managers have to produce this information at the moment, and it's checked it's checked internally, but it's checked externally by the regulators to make sure.
Because they're regulated.
Yeah, because they're all regulated entities. So this is going to give much more transparency from documentation. It's going to help the regulators, it's going to help the financial advisors, and it'll be one place that they can actually upload it onto at the moment.
Was the missing piece then not having a platform to upload it to? Because you'd have to individually go and download these documents, which I assume would be publicly available anyway.
Yeah.
Just a means to...
It's a central depository.
Yeah.
But because it's on a blockchain, it makes it a lot more compliant because you've now got documentation of when it was uploaded, who's looked at it, when was it loaded. And if there's a mistake with the document, you load it, oh my goodness, so you can now flag it and say, don't buy this fund, or if you buy this fund, buy beware. And then they can take... There are other companies out that have done something similar, but nothing has ever gone onto a blockchain like this. And they've got aspirations. Well, we've already got salespeople here for the UK and actually Europe, in Germany, because Germany's a very big market. And the intention is to then go mutual funds, hedge funds, VC funds, ETFs, Europe, and then on to Asia and America. And one of the initial big investors is actually a big Asian company. And they're saying this is something we desperately need to make the system more efficient. And again, I think it's a great... The reason I was delighted to be asked to be a NED of this is, okay, I understand the mutual fund industry, having been in it, I understand a little bit about blockchain, but it's a great example of making... Most people will never, ever know about this. It's just behind the scenes.
Well, they will now.
But it's just making the whole thing more efficient. Well, of course they know now, because this is news at 10.
Yeah, well, precisely.
Watch out, Murdo. Here comes Matt.
Yeah, appreciate that. The last thing we want to talk about was Gemini Capital. Just tell me a little bit about that.
Well, the founder, Stuart Alexander, I've known for a long, long time, bumped into him just up the road, and he suddenly said, I hadn't seen him for years. And he said, oh, do you want to be my chairman? And I said, what? He said, well, yeah, it's a bit like asking to sleep with someone on the first date. And I go, well, hang on, Stuart, what's all this about?
One step at a time.
Steady, boy, steady. And essentially, he'd set up a platform in Dublin. Dublin's a super interesting place, not just because it's great Guinness and friendly people, but they cross-sell to 90 jurisdictions. So if you ever use it in Dublin, you can sell to 90 other countries. And we've got a platform now with about 5.5 billion of other people's money that is managed by fund managers in Asia and in Europe and America. And we just do the compliance and administration for them. And then they actually pick the stocks. And it's all very, very simple, straightforward equities and bonds. There's nothing, there's no sort of cryptocurrencies or anything, and there's nothing untoward in there. It's very much sort of the stuff that you find in your pension or in your savings. So we enable smaller fund managers, although we actually now have some bigger fund managers, because we can set up a fund faster and cheaper. We're talking to one company at the moment, and they've got a reasonable amount of money under management, but we reckon we can undercut where they're at the moment by $380,000 a year.
Small amount of money, though.
It's a lot of money. No, but blimey. No, but they've got several billion. But I think, wow.
Yes. I just want to sort of bring it back as we get to the end of this to sort of why we're sitting here, which is blockchain tech. What projects are you excited about? Like, if we had one or two in the next few years, what is it that's really sort of exciting you?
I'm really interested to see this digitization of the land registry. The idea,
it's happening. Do we know this for a fact?
They're just finalising the funding. And the reason I like this is there's a horrible product in the market that the industry hates, the regulators loathe, and it's called equity release. And it's where, my mum actually sells 10% of her house or to an insurance company or a bank or whoever, and then the interest on that gets rolled up and rolled up. It's fine when you've got low interest rates, but we've got a big inflation problem globally. It's just rubbish to say that it's going away. We've printed far too much money. If you look at M1 money supply in the States, it was about 4 trillion, and then it about 19 trillion now. 19 trillion. And because the banks pay such poor interest rates, as I say, there's about 4 trillion being sucked out into these cash mutual funds. But so if you have high interest rates, the interest rate is eating away at the equity in your property. Whereas this equity release type scheme of common ownership, you could buy 10% of my mum's house. So mum's house is worth 100,000. You give mum 10 grand. You now own 10% of Mrs. Fry's house. And when she dies, your name's on the land registry, you get 10%, whether it's gone up or down. Now, it also means that, for a lot of people that are not earning very much and can't get on the property ladder, they can put, £1,000 into a property in Norwich or into Reading or into Cambridge or into London. Or, you're sitting in London and you own £1 million house, let's say. And
next to my Lamborghini.
Next to Lamborghini. And you're saying, well, actually, why have I got all my money tied up in one house?
Yeah.
Maybe I should sell 20% of this house that I live in and put that 200,000 into properties in different parts of the country, different parts of the world. Diversify myself.
But do you think blockchain tech is going to be able to allow people to deal with equity releases easier, quicker?
Much quicker. It's going to be swipe. It's going to be like, I've never used it, but what are the websites when you're dating, Matt?
Websites.
What's your favourite one?
The app.
What's your favourite app?
They've got Bumble, they've got Hinge, they've got...
I knew you'd know them.
See them all over the tube. All the adverts.
Absolutely. So it's going to be like that. You'll literally be able to say, okay, well, I want to put... You've got to be KYC.
You're going to be swiping through like a dating app.
Absolutely. I like that house. I like that house. Oh,
I want to own 10% in this, done.
Yep. And it'll be like that. Or you'll be able to have then some of that money put into your bank account, and then you'll be able to literally buy a cup of coffee from Starbucks using the brick off the top of your chimney. So at the moment, there's another bank that we're working very closely with, and that's exactly what they're working on at the moment. So actually giving you loyalty points and then giving you cash so that you can then spend it on whatever you want to do.
Wouldn't that be terrifying if you're a tenant?
You can't sell more than 51%, so you can never be evicted.
Because that would really worry tenants. All of a sudden, then the property that you live in is being traded, and it makes sense.
But if you've got two properties, especially in London or big cities, they're identical. They're absolutely identical. And this one is actually liquid because you can trade it, and this one isn't. Guess what? This one is probably worth, the banks reckon it could be worth as much as 5% more. Because this is actually liquid. I can trade this up.
Yeah, it's open up for you to be able to trade, yeah.
So the Bank of England claim, if this company can get off the ground, it could unlock about 300 billion.
Would have to be regulated, wouldn't it, as well?
They don't regulate property.
They regulate property industry, but surely this would fall under a regulatory regime because it is...
They went to the FCA, so we want to regulate, said, no, we don't regulate property. So they went to the Bank of England.
But it's not property, it's a token. It's sort of like, it's a security to some extent, isn't it? Like you would in the American terms, right? No?
It's your name on the land registry. Shared ownership.
So you're trading a portion of ownership marked by an entry on the land registry, and therefore the FCA have said to you,
we don't do that
with us.
Isn't
that interesting?
So I went to the Bank of England. The Bank of England said, this is brilliant. So how much do you think the residential property market is in the UK?
Go on, you're going to tell me.
No, come on, you give it a guess. You keep doing that. Typical lawyer.
Just tell me.
5.5 trillion.
Wow.
5.5 trillion. So 5%, nudging 300 billion. No debt, just unlocking. So actually, if it comes, you could actually sell, 10% of your house and buy a couple of Lamborghinis.
There you go.
Matchbox funds, maybe.
When I asked you what you're excited about in the future, I wasn't thinking that you were going to say land register, but you've convinced me. It sounds like a good.
Well, it's $326 trillion worth of assets. You want to get, if you're going to get excited, no point getting excited over Bitcoin where it might double or triple. This impacts on equity release. It also impacts on investors or people that don't have much money to be able to get onto the property ladder. So that's why I think it's a really, really interesting project.
Jonny, thanks very much.
Thanks, Matt.
Appreciate you coming and talking.
Yeah, been a bit of fun. Hopefully,
certainly has. Thanks very much.
Okay.
This podcast does not contain any financial or legal advice, and you should not seek to rely on it as such. Opinions are the individual's own. This podcast was produced and edited by Joe Hawkins and music by Luke Carey. Thank you for listening and see you next time.